All right, today we're diving into a really fascinating story, Cambodia's high-stakes financial gamble.
So, let's get right into it because this is a wild one. How can one single nation be known as a hotspot for money laundering and at the exact same time be hailed as a pioneer in digital currency? It just doesn't seem to add up, right? Well, that's the paradox we're going to unpack today.
And you can really see this clash of worlds right here. On one side of the coin, you've got this cash-based economy running mostly on US dollars, which, has some serious vulnerabilities that criminals love to exploit. But then, on the flip side, you've got this absolute explosion in crypto adoption. We're talking one of the fastest growing crypto communities in all of Asia. It's like two different universes colliding in one country.
So yeah, let's dig into this financial paradox.
What we're going to do is unpack how these two completely opposing worlds, one stuck with some serious financial crime risk, and the other leaping into this hyper-modern digital future, are somehow managing to coexist. And, maybe more importantly, how the Cambodian government is now trying to build a bridge between the two.
Okay, first things first. We've got to understand the old world side of this equation, the shadow economy, and why it's a system under so much strain.
And to really get it, we need to talk about a key concept. AML. That stands for anti-money laundering. Basically, it's the whole set of laws and procedures meant to stop bad guys from taking illegally obtained cash and, washing it so it looks like legitimate income. And let's just say, in Cambodia, the system for enforcing these rules has, it's had some major struggles.
So you may be asking, what exactly makes the country so vulnerable? Well, an analysis from Sanction Scanner calls it a perfect storm of factors. You've got economic challenges like low income and high inequality. The country is heavily dollarized, meaning they use the US dollar for almost everything, which makes tracking illicit cash flows a nightmare. Throw in some loosely controlled casinos, especially near the borders, a weak judicial system that struggles with enforcement, and, you guessed it, corruption. Each one of these is a crack in the system, and together they create a massive opening for financial crime. So it's not just one thing, right? It's this whole cocktail of systemic issues that creates a really high-risk environment. Now, I want you to keep all of that in your head because we're about to do a complete 180 and look at the total opposite side of Cambodia's financial story. All right, let's pivot to the other side of this paradox, the digital leap. Because while all that shadow economy stuff is going on, Cambodia is also taking this incredible leap straight into the future. So, why the huge leap? A huge part of it comes down to one staggering number, 70%. 70% of Cambodians don't have a traditional bank account. Think about that. That leaves a massive void, a huge population that needs some kind of alternative to a regular bank. And this isn't just about day-to-day banking at home. You've got about 1 million Cambodians working overseas, and they send home something like $1.5 billion a year in remittances. If you've ever tried to send money internationally, you know the fees can be killer. So of course, cheaper, faster options like crypto start to look incredibly attractive. And get this, the government itself saw this need and jumped in. The National Bank of Cambodia launched its very own digital wallet and payment system called Bakong, and the uptake was just explosive. By the end of 2021, it already had almost 6 million users. That's incredible growth.
So what is Bakong exactly? Well, it's what we call a CBDC, which stands for Central Bank Digital Currency. Now, the key thing to remember here is control. Unlike something like Bitcoin that's decentralized, a CBDC is the country's official currency, just in a digital format. It's issued and controlled by the central bank. You could almost think of it as a state-run blockchain.
But Bakong is just the tip of the iceberg in what's become a really busy ecosystem. So you've got Bakong, the government's own system, sitting at the top, but then you've also got new, officially licensed local crypto exchanges popping up, like RGX and CNX. They are partnerships with big names like Ripple, all aimed at making those cross-border payments cheaper and faster. And then there are the big foreign exchanges like Binance, which got super popular until the government blocked them to, steer everyone towards their new, homegrown, regulated platforms. So you see the picture, right? You've got this high-risk shadow economy on one side, and this booming, kinda Wild West digital frontier on the other. It's a recipe for chaos. And that brings us to what the government did next. They stepped in to try and tame this digital frontier by forging a whole new set of rules. And the change in policy has been absolutely whiplash-inducing. I mean, think about it. In 2018, they basically banned all unauthorized crypto. Just 2 years later, in 2020, they launched their own digital currency.
And then, bam, in 2024, they dropped a brand new legal framework. They went from no to here are the rules in just a few short years. This new framework is called a prakas, which is just the Cambodian term for a ministerial order or declaration. And the one that came out in early 2024 was a huge deal. It was a landmark move that created the very first official rulebook for crypto in the entire country.
This was the government basically saying, okay, this is growing too fast to ignore. We need to bring some order to this market. The goal was clear: harness all the good stuff, the potential for innovation and financial inclusion, while getting a handle on all those risks we talked about earlier.
And how they're doing it is really interesting. The core of their new rulebook is this two-tier system. They created a Group 1 for crypto assets they see as safer, like stablecoins and tokenized assets. Banks are allowed to play with those. But then there's Group 2. That's where they put the more volatile stuff, Bitcoin, Ether, the big speculative coins. And those are deliberately kept walled off from the normal banking system. It's a way to contain the risk.
So when you put it all together, what you're seeing is Cambodia's crypto blueprint, a real strategy for a whole new era.
And the strategy is actually pretty straightforward when you break it down into 4 main steps. 1. Promote their own national CBDC, Bakong, to tackle that huge financial inclusion problem and strengthen their own currency. 2. License local exchanges, which gives them oversight and control. 3. Build that firewall to keep the risky, speculative coins away from the core banking system. And 4. Block the unlicensed foreign exchanges to push users toward the regulated, local options they can actually monitor.
And this is where it all comes full circle, right back to that paradox we started with. The grand plan here is to walk an incredibly fine line. On one hand, they want to use the power of digital assets to bring millions of unbanked people into the modern economy. But at the same exact time, they have to build strict new controls to finally fight back against money laundering. It's a huge balancing act.
Look, there's no other way to put it. This is an incredibly ambitious plan. They're trying to use brand new technology to solve some very old, very deep-seated problems, all while juggling some massive risks. And that leaves us with the big open question. Is this the future of finance we're watching unfold, or is this high-stakes financial gamble just a massive collision waiting to happen?